Y procedemos a analizar el impacto de los aranceles sobre el comercio mundial. Nos acompaña para ello Kevin Thozet, miembro del comité de inversión en Carmignac. Good afternoon.
Good afternoon.
Kevin, what analysis do you have of Donald Trump's tariff announcement?
Clearly it's bringing a stagflationary shock, or the risk of a stagflationary shock on the US economy. We were in an environment where what we called soft data, so sentiment of households, sentiment of CEOs within companies, was turning south, so it was flattering, with the risk to see this soft data converging towards hard data. So we were in this environment of slowdown in economic growth. We are seeing a stagflationary shock, with a downward shock on economic growth, with the risk to see an upward shock on inflation, and as we move forward, the growing risk of having more of a hard landing in the US, I would say.
Will the US president manage to reduce the US deficit with his tariff plan?
Well, that's a difficult one indeed. I mean, that's the plan. Maybe it will happen over the kind of the long term, but I'm not too sure it will be the case over the short term. Why that is? Because to reduce deficits, and those deficits are measured against the economic growth in the US. And as I've just said, the very strong shock we are seeing, and we're talking about an increase of 18% on average on US tariffs. That's just huge. Brings the risk to see a downward economic growth in the US. What we have penciled in at Carmignac is that GDP could be reduced by 1 to 1.5% this year due to the tariffs. So indeed, deficits might come lower, but the risk is that the economic growth to GDP is falling faster than the deficits, basically.
You have talked about a slowdown, but what is the real risk of recession?
Yes, well, when we're looking at kind of betting markets or financial instruments, what they are tending to show is that the probability of a recession in the US for this year has increased, and it's today penciled in at 50% if I'm looking at various indicators. And I think that's what is starting to be reflected by markets. So markets are not already pricing this recession risk or this hard landing risk, but what markets are saying is that in fact the US is expected to decelerate, and this shows, I think, in the performance of equities. And we're looking at US equities futures ahead of the US Open. They are falling more than European stocks. They're falling more than Asian stocks, even though Asia and Europe are, let's say, the main targets of those very significant tariffs. So that's one indicator. The second indicator, I think, is the trajectory of the euro. You were just mentioning that the euro has appreciated, and has appreciated a lot compared to the US dollar. This is a very different playbook from the first rounds of tariffs by the previous Trump administration. Back in the days when they were implemented, we were seeing an appreciation of the US dollar. It's not the time this time around. Why? Well, I think it's because what we call the economic growth differential is going to evolve in favor of the euro and the euro area. What I mean by this is that this tariff shock is going to weigh on US economic growth. It's going to weigh on European economic growth as well, but it's going to be more damaging for the US. So again, this economic growth differential is likely in favor of the euro. So that's one important factor. And as usual, we Europeans, we need let's say a kick in the butt to be moving forward. Now we need to have a very strong reaction, or we mainly react in the face of very strong adversity. And maybe what is happening, and last night's speech by Mr. Trump will kind of accelerate the potential to see even more support by European authorities. So basically fiscal support, and not waiting for the 2026 or 2027 Mr. Mert's plan.
You have talked about Europe. Has Europe the tools to respond? It will do so in time?
Yes, I mean, again, what we expect at Carmignac is that the European authorities will take, let's say, a measured approach. So the first step, and that's what Mrs. van der Leyen has started to hint towards, is that in fact European authorities will first start to negotiate, and that's potentially what Mr. Trump is expected. Starting very high with this kind of 20% increase on tariffs, and then to get somewhere between 10 or 15%. So this will likely be the first, let's say, step by European authorities. Clearly, if those things are not happening or are not working, then I think Europe does have some tools. Tariffs are mainly on goods, but we could be creative as well, and we could come with taxes or levying duties on services. That's a possibility. We have very significant savings collectively in Europe invested in US assets. We could encourage Europeans to favor European assets rather than US assets. There would be many, many possibilities. But we think that first, what we will see is European authorities coming to negotiate with Mr. Trump and his administration. That's one, and at the same time, likely providing some form of mechanism akin to what we have seen after the pandemic. So notably the SURE, the SURE plan, giving loans to those sectors and companies in pharmaceuticals and the auto sectors, which are likely to be, let's say, the most negatively impacted by those tariffs.
We have talked about Europe, about US, but for finish, Kevin, what effect can a circle of tariffs and counter tariffs have on the global economy?
Well, I mean, tariff is a lose-lose game. I think collectively we will all be losing. So it will be more negative or negative, strongly negative for the U.S. economy, negative for the European economy, and negative for Asian economies as well. So as a whole, what we will have is slower economic growth and higher prices. That's what is likely to come up from those major tariffs. So that's, I'd say, one consequence. The second consequence, I think, is that in fact we will all likely be more and more self-centered. We were living in a very kind of global economy, exchanging with the US, with Asia, with Europe, with Latin America. This has started to take a blow with the first Trump administration, a further blow after the COVID, and this is likely giving it another blow. So what does that mean? Well, supply chains will not be as efficient as they were. We'll likely be producing things closer to us, selling products for basically our close neighbor, and that's it. And this will likely potentially impact China as well, because China is another, I would say, clearly in the target of those Trump tariffs. And what will China do? Potentially try to work more with Europe, but also potentially try to develop more its own, let's say, domestic markets.
Kevin Thozet, miembro del comité de inversión en Carmignac, thank you for joining us. Thank you for the interview.
Muchas gracias. Adiós.